The great train robbery and markets were stable. What's up, everybody? Welcome aboard to Bubba's Bottom Line. Always great to be here with you, especially today, Memorial Day weekend. And of course, before we do anything, we must first of all thank our veterans and their families, those that are in service now. It is obviously because of you I am allowed to do what I get to do. And of course, I salute you and thank you and wish you a happy Memorial Day. Make sure you give a thought out to those veterans who made this country possible. Happy Memorial Day, everybody. Anyways, what's going on? And of course, we had a very quiet market last week with a little bit of whipsaw, a little bit back and forth action. You saw the markets break down hard on Wednesday before the Fed minutes, and of course, the Fed minutes are as laughable as can be. Naturally, they're going to remain dovish, and of course, not a surprise that they remained in their own dovish little ways there. But at the end of the day, the markets reversed and actually closed higher on the day after being much lower. Thursday, we had the announcement that the North Korean deal was off and the market sold off. I want you to notice how the markets went right down to support and then bounced on both days. Forget about what the news was, because the news is meaningless. They went right down to a level and they popped right off of it. As we said a couple of weeks ago, the markets have broken that downtrend. They were in consolidation. They broke out and they bounced exactly where they should have. Now, we have a lack of volume and a lack of real volatility and a lack of real interest, but the markets look a little bit better and they look like they could, again, it would be no surprise if they went up and took out the highs. Longer term, we think that they're going lower, but in the meantime, in the short term here, we cannot rule out a run. I think that, interestingly enough, we saw gold last week find a bottom. We thought 1280, the low was 1280, 140, and we're now back in the 13s. I think you look for a run to 1330 before it halts, and then I think we make a run at 1365, and we'll see what happens there. Again, I think if you're going to be in the gold trade, you want to be on the long side of it. I don't see any reason to be on the short side here. I don't. Even if you were right in the very short term, I don't think it's going to go down low enough to help you benefit. And of course, we saw the bond markets had a big rally last week, bringing interest rates, bringing the 10-year back underneath at 3%. And again, I think this is just temporary. You know, the bond futures were very oversold, which means that rates were very overbought. We get a natural sell-off. I don't look at it as anything more than what it is. You can talk about it through the Fed. You can say it's the dovish Fed. Interest rates are going higher. You can bet on it. Just take a look at LIBOR. Take a look at what's going on. So at the end of it, a little bit of a rally in Treasury futures. Okay, it happens. All right. Again, no market goes straight up or straight down. There's going to be some areas where, you know, when we had the big sell-off, there was big rallies at some point. The rip your face off rallies. It happens in every product, just not market, just not equities. We saw the dollar continue to run. Not a surprise. The dollar, in our opinion, is going well past par, but probably par this year. And I think our next target before we would see any selling would be probably 95. When you look at the picture, again, that's going to be, it's positive, but it's going to be a negative. And of course, combine that with the 10-year rates that are going to go back over 3%, 3.5%. We expect 4% by the end of the year. You will see that this will cause a problem. And we'll talk about that in a little bit. In the meantime, the grain markets, again, very strong, especially soybeans after that disastrous last week. Again, I think there's an outside chance that we see a big market in the grains. We'll see how it plays out. A lot of that has to do with what happens in equities. We had the meats were again stronger last week, and they look like they finally found their bottom, are going higher. So I think there's a lot of good action in the ag space, and of course we're buyers of dips there as well. Bitcoin and the cryptos, a little bit mixed action. But again, I think they found some support and look like they want to start to go higher as well. I think that the story is that they're real, they're spectacular, and they're going to be around. It's just a question of which one's going to make it through the internet. This is almost the identical model as the internet bubble. Which one makes it, which one doesn't. And of course, we can see what happened if we go back into the 90s when we had the internet bubble and which companies are around today. The big story last week was oil, and that is what we call the Great Train Robbery, which we will talk about actually in our commentary. But oil did collapse pretty solid, and it culminated with a blow off to the downside on Friday, with oil being down over $3, down in the around 68. We are looking for dramatically lower. Now, again, we would expect, though, probably a bounce early in the week. Again, as we talk about all the time, as bearish as I am in oil, and as I've been able to maintain and stay in it, although it was very painful, we expect to see a little bit of a rally because, again, the overselling on high volume pushed it right down to what we would consider a possible support level. So we would expect to see a bounce off of there before it continues its way down. But we believe now it's been certainly broken, and we're going to head dramatically lower, and we see oil going into the 50s and possibly the 40s. So again, it's not going to happen in one day, but that's where we're targeting now after we think we've finally seen the break, okay? But, you know, it's really interesting to look at what's going on and to listen to the pundits and listen to all the advisors at how great everything is and where we're going. And I think we're all feeling like, like it was 2007 again. The world is great. Okay, nobody cares about the credit card debt that is at massive levels. It is at bigger levels than ever. Nobody cares that we are seeing subprime lending again from the banks. Okay, the banks certainly don't care, and why would they? I mean, they're going to get bailed out again anyways if something goes wrong. You know, we seem to forget and have an issue remembering what has happened and how it happened in the past. Now, we all know that the banks will get bailed out once again because everybody's worried about the financial system. That's the biggest crock of crap ever. Okay, look, if they let this happen again, and you can bet it's going to happen. All right, again, we're not perma bears. We're not looking for a disaster forever, but we are looking for a market meltdown because they come along every so often, and this is the right time, and everything is setting up in the right direction for that. You've got massive amounts of debt out there. You've got subprime lending again, where we don't have to worry about what you own, what you have, what you make. Okay, so you have these things happening, and it's got to pop. And it's got to explode. It's got to go in reverse. And this is going to be, if you tie in the auto loan debts, the credit card debt, and the subprime lending again, you're just creating another big mess, okay? And I think that you've got, some issues here. And then you tie in the rising 10-year. Yes, I know it sold off a little bit last week. The rising dollar, okay, that now affects the global picture. So when we look at this entire picture, we see that there's some issues abound here, and we're going to see some problems. Now, again, I'm not saying the markets are going to sell off today or tomorrow. I'm just talking about the subprime lending and the disaster that's going to be created here. And I think this is where we always run into the mistake by trusting what the Federal Reserve is going to do, because A, they're clueless, B, they are only interested in supporting the stock market, not the general economy, and they can create as much debt. I mean, they've got $5 trillion in now, and where is that going to go? And this is another issue when you look at the bigger picture. All of this debt, we're going to be soon at a inverse. We're going to have more debt than GDP. And of course, this is something that continues to roll along, but nobody cares. And this is where I see a problem, because nobody cares. You have to have some fiscal responsibility. These programs that we continue to try to institute are creating massive amounts of debt, and nobody cares. Now, I think that President Trump cares, but I think he got killed over a barrel on the last deal. But still, the debt is going to create a major problem. And that's the debt bomb that we talk about every single week. Now, again, it doesn't mean it's going to happen tomorrow, all right? But the bubble has reached absurdity, all right? I mean, you look at companies now. Netflix has a higher valuation than Disney and Comcast. Okay, Netflix, who's basically a big bubble on its own. Now, I think Netflix itself has value as a company to be bought out. I don't think they have value as a standalone. And I don't think it would take long for somebody like an Apple or a Disney or an Amazon to, when they decide to wipe them out. And I believe that they will be taken over at some point, and I'd always thought they'd be a takeover candidate. But isn't it ridiculous? It's like the same as Tesla being more valuable than some of the major automakers. It's not logical. It doesn't make sense, especially in Netflix's case when you just have content. Okay, in Tesla's case, when you can't even produce a product yet. I mean, you're producing about 30% or 40% of what you're trying to produce. Yet we're pricing in like it's going to be there, and you have not been able to reach and net your goals yet. So where is this going to work itself out? Okay, I think that the Fed Chair Powell talks about financial stability and central bank transparency. I don't think they're transparent enough. I mean, I think that they don't tell you the truth is more the story. I don't see where they talk about their inflation target, and because in my eyes, inflation is far past where they want it to be. Okay, again, I know that they don't count goods and services, they don't count oil, they don't count food. They call it food and energy. But again, when you talk about inflation and you're only talking about the items that are big items that are only purchased every 10 years, what does that have to do with it? When employees have to make money, okay, and they go to work and they don't get a raise every day, and all of a sudden gasoline is up 25%, okay, that's a 25% hickey to their paycheck. Okay, when food is going higher, that's another problem. So if I'm making $50,000 a year and food and energy are both up 25%, where's that money going to come from? This is the biggest problem. That, again, this is when you have the cluelessness of the Federal Reserve trying to dictate policy based on a textbook, based on an economic theory, which is just dumb. I mean, it's not even, I mean, these are very smart people, but their policies, their ideas are dumb because they don't take into the effect that we have to have some common sense and have an understanding of how a business and how the world works, and they don't. Okay, you can tell me all you want, but watching how they work, they have no fundamental basis of understanding that if my car breaks down, I can't read the manual when I'm out in the middle of nowhere. I got to figure out how to get that thing running again. And they have not figured out that if they would have raised rates all along, we might not be in this position. And they're going to create a much bigger problem, and they will be part of the black swan when it does appear. And that will tie into our theory of the dollar rising, interest rates rising, and the cluelessness of the Federal Reserve. This is Bubba's Bottom Line. We're going to step out here for break. We'll be back with more on this Memorial Day. And again, happy Memorial Day. I salute you once again, all veterans and the families of. Bubba's Bottom Line. We'll be right back with more after the break. Everybody, I want to remind you on this Memorial Day weekend, we are trying to help educate our youth. And of course, if you'd like to help out, go to highschoolinvesting.com, check out our curriculum. And then if you like what you see, go to Patreon, patreon.com/Bubba Trading. And you can go ahead and make a small donation if you want. We're getting to a key decision point going into the next year, going into our 8th year of this, on whether or not we're going to be able to survive. And because, again, I've put in quite a bit, and now I need to get some help as we give the program away for free to the schools. That's patreon.com/Bubba Trading. And don't forget to catch The Bubba Show every day, 4 to 5 Eastern on Liberty Talk FM. Now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, we look around and we see some of the things that are going on. And of course, we talked earlier about debt to GDP, that nobody cares. And of course, we wonder about the currency situation. We wonder about the system. Okay. And here we have a statement, first from Janet Yellen and now from others, basically stating that this time is different, the markets are different, the world is different. And the exact statement was there will never be another recession or a bear market. Okay? Now, we all know that to be factually impossible. We all know that the markets run in cycles. We all know that John Maynard Keynes, the father of our economic system, the Keynesian way, okay, said the same thing in 1928. Of course, he's only missed by about 40 of these big sell-offs and these problems. Okay, but you can't look at things when you underestimate the debt. Okay, that's what we talked about before. You cannot underestimate the debt, which is why you're seeing this financial revolution and the big draw into the cryptocurrency world. Now, we heard Jamie Dimon about 6 or 8 months ago, whatever it was, maybe it was a year ago. Who knows? I'm old, I'm senile, I don't remember. But whenever he said it, he called it crap. He called it a scam. Whatever the words were, I don't remember what they were exactly. In the meantime, they now have a cryptocurrency department. Okay, now you don't think that they weren't buying cryptos all along? You don't think they weren't trading? So when he threatened to fire people that were trading, they did. A big bank like J.P. Morgan, they just can't one day wake up and say, okay, we're going to put this new department, and it takes planning. So you don't think that was already on the maps? The same thing with Goldman and all these others. I mean, again, do they really think that we're that dumb that we don't understand what they're doing behind the scenes? And that, to me, is a tragedy. And we saw that President Trump took out, a lot of the regulations of Dodd-Frank again. Now, again, I'm anti-regulation, so I'm all for it. But I think that we need to find a way to help the smaller banks. I think we need to find a way to help the community banks. I think that's where the biggest torture has come throughout this regulatory body and throughout the way that we do things. And to me, that's the real problem. Back in the day, I mean, in Illinois, now I can't speak for the world because I don't know, but back in Illinois, 40 years ago, 45 years ago, you had one bank. You didn't have branch banking all over the place. And you knew your banker. You went in, you said hello, you shook his hand or her hand, and they could help you out. And obviously now that is not the case. Every bank is so big, and of course these employees move around like crazy. So there is no real loyalty there. So I think that our job is to really make the smaller banks more competitive with the bigger banks, because listen, when you're out in Iowa, or you're out in Kansas, or you're out in some suburb, some outside shop where there isn't 75 J.P. Morgan offices in a walking distance, that's where we need the help in our banking industry. That's where we need help with the individuals to help the people that really need to have a relationship with their banker. And I think that is one of the big problems that I could see. Now, you've got, even with the big oil sell-off of last week, you still have those preaching $100 oil. Now, why are they preaching $100 oil? Well, because they're trying to get you to continue to buy it so that they can sell it. Again, this is not an old story, and we'll get to that in my commentary, okay? Because I think that this is something that is very important when you look at the bigger picture and you learn to understand, okay, that this creates a much bigger problem. Very much so like the rising interest rates that we're seeing. Very much like all the other things that are happening in the economy that we continue to ignore. We can say that it doesn't matter. We can pretend like we have good jobs. But let me ask you a question. Think about this for a minute. Do we really have good jobs? The people that need the jobs, the people that need to have the higher wage jobs, can't get them, okay, because they're not qualified like me, okay? So when you look at it and you say, yeah, there's a lot of jobs in demand, there's a big backlog of jobs that are available. Unfortunately, the reason they can't be filled is because those jobs are more designed for those people that have been educated into the technology age. And guys and gals my age, guys, I would say 45 to 65, are people that are not educated and can't get trained fast enough to take advantage of those jobs. So yeah, we have a low unemployment rate, but have you noticed when you've gone into the Walmart or into McDonald's and you see all the middle-aged, or actually it's not middle-aged anymore, the 50s and 60s people working there, okay, at minimum wage? Now, there's nothing wrong with those jobs, but there's certainly something wrong when you had a job that you were making $35 an hour plus benefits, and now you're making $11 an hour with no benefits. That's a big haircut to anybody and to an economy. And of course, we've seen that show up in the retail sales. We see that show up across the board. And I think that is another issue that is happening. And of course, they always seem to find and make excuses as to why we didn't accomplish something. And of course, now we're seeing, well, the reason housing is a little weaker because there's no inventory. Well, there's inventory if there's money to be bought. Again, it's a interest rate money issue right now instead of a true free market system right now. And that is something that I think is a problem, okay? And this goes back to the debt. Everything kind of relates back and goes first full circle back to debt, okay? The collapse in '08 was due to debt. The collapse in '01 was more or less due to debt. It always comes back to the same things. We get there in different ways, but one of the things that we have to be aware of is the continuation of people telling us that we have nothing to worry about, that this time is different, because many people do believe that fact, that it's different. And what we do know is that it's never different. You can go back to tulip mania, you can go back to the South Sea bubble. The South Sea bubble in the 1700s, Sir Isaac Newton went broke. He got in, made a fortune, got out and couldn't control himself. The fear of missing out, got in again, and ended up a pauper. Okay? So again, you're seeing the same kind of action. Again, I'm not telling you when it's going to end. I don't know. What I do know is that eventually it will. What I do know that if you're an investor, you should stay invested in the market. If you're an investor, you shouldn't try to time the market. Okay? That's the key. If you're an investor, you just close your eyes. Okay, knowing that the markets go up 8% year over year. You should hedge, but if you're not, that's fine. In the meantime, if you're an investor, you shouldn't try to time the market. You shouldn't roll. You shouldn't go into these, well, let's say I got to go risk on, risk off. That's a crock. That's a strategy invented by the advisors to get more commissions generated. It has nothing to do with portfolios. Okay, it's a strategy to roll you from one to the other so you can continue to A, keep you in the market, and B, make more commissions. Okay, that's really what that story is all about. And that's one thing that really bothers me, is that if you just hedged your overall portfolio, you wouldn't have to do anything. Okay, that really is much more important as we look at it. But we're going to stop out here for our final break and come back with my commentary. This is Bubba's Bottom Line. Todd Bubba Horwitz. We'll be back in a minute with more. I want to remind you about highschoolinvesting.com. Check it out. If you want to help us out, you can go to Patreon, patreon.com/Bubba Trading. We're just trying to help educate America, educate our youth, and continue rolling. So hopefully you'll check that out. In the meantime, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. And now let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz, and of course it is time for my commentary. And as I opened up the show with the great train robbery, and of course that's really the oil companies robbing us once again. And this to me is a tragedy. This is the biggest BS in ever. It happens about every Memorial Day. Did you notice how we're always short oil and oil prices always kind of jump into the driving season? It's almost like the oil companies plan it. Oh, they probably do. Now, again, I don't know that for a fact, so this is just strictly my opinion. But watching this over time, watching this year over year, I kept saying, in my opinion, oil is overpriced, and of course, all of a sudden it starts to fall. Now, again, it may go higher, but to me, this is a manipulated, misguided way to once again scam the American public. Okay, that's just my opinion. I have no factual basis here, but I will bet this, okay, that you watch the oil companies, they will have record profits once again, okay, because this is what they do. Believe it or not, I used to pump gas in the early 70s when we first started having some of these oil problems. And of course, it's always the same story. The oil companies figure out a way to create this panic or this fear, and they have the help of OPEC and Saudi Arabia and the rest. And of course, they create this shortage or this imaginary shortage only to get this big squeeze up so that I have the privilege of paying $3.30 at the pump. And people in New York are now, some of them are paying $5. And of course, that doesn't count the ridiculous taxes that you have to pay in many of the states, Illinois being one of them. California, I think in California, it's maybe 90 cents of the gallon is to pay taxes. Isn't that a crock? Is that not a ridiculous ripoff for some worthless commodity that there's an overabundance of throughout the world? But yet, here we are continuing to let the oil companies, why? Well, because big oil runs the world still. Otherwise, we wouldn't have this big demand, because in the United States of America alone, without affecting the environment looking for it, there's over a 200-year supply. Now, someone has to tell me that how we cannot have a better way of doing this or more fuel efficiency. Oh, wait, why? Well, because if we did, they wouldn't make as much money. Okay, and I'm not against and opposed to them making money. What I'm opposed to is them making money on the backs of us through manipulation, okay? That I have a problem with, because when I look at it, I see that the overall system, they will have record profits, then that there would be no reason for them, no ability for them to have record profits if there was truly a shortage, if there was truly a problem. And I think that, to me, shows you that it's not, that it's artificial, that it's a scam that they run so that they can continue to be in charge. And to me, that's a much bigger problem. To me, that's an issue that needs to, so we call it the Great Train Robbery. And of course, certain things we never find out, but if you check their profit statements, you can say, well, then how'd they make so much more profit? That's the only way that we can really keep score. But why don't we have better fuel efficiency? Why don't we have better ways of doing things? You know, it wasn't until about the 60s when Toyota and the others came over and we started seeing some more foreign cars that even our speedometers went past 99,000 miles. So they were forced into making better cars, better fuel efficiency to compete. But really, we have always toned it down. Why? Because, of course, want to keep you coming to the pump. And it's amazing how the prices at the pump always go up so fast, and then when oil drops, they don't come down so fast. It's amazing how that works, that they continue to get the top dollar and work prices higher, while at the same time the prices are dropping. It's a magic act. Houdini and David Copperfield and Mandrake and Blackstone would all be proud, but I am proud to be an American, and I want to once again thank all the veterans and their families and anybody on active duty. I thank you all. Happy Memorial Day. I salute you, because if it wasn't for you, I couldn't have this piece. I couldn't have this show. I thank you. Happy Memorial Day. Have a great weekend, everybody. Thank you so much, and we will see you next week.